In fact, we have Kunj Bansal, who has been around in the market for 25 years plus. Kunj, what are you making of the weakness which is setting in? 400 point on the Nifty, or the Sensex is gone, and at days low over 1% on the Nifty as well. The negativity on the street, how are you gauging that?
Yeah, thanks, Ajay. So I have two ways of looking at it. In the first instance, I would like to place myself just before 5th July, which was the budget day. And all of us had these questions or doubts or thoughts and discussions that macroeconomic factors were not supporting. GDP for Q4 had just been declared before that, and it came to a low of 5.8%. Corporate earnings were not supporting, but markets were continuing to move high and were close to life high. And so all of us were wondering that what is happening, why is that? So at least now that has been taken care. At least we can say that market is falling in line with the fundamentals, which is the fact that earnings growth was not happening and is not happening, and the macroeconomic factors are also not supporting. So that's one way to look at it. The other way, of course, that yes, budget or anything else can be the reason for that final ultimate market correction to happen, which is what it seems to be happening. Obviously, a lot of developments in the budget, so extra taxation on individuals and FPIs, more so from the purpose of market point of view on FPIs is being taken negatively, but probably I think somewhere market is looking at the fact that the fiscal deficit target of 3.3%, which government seems to have targeted for itself, may not be achievable. So that is something that could be more in a broader sense that market is looking at corrections. Of course, we have to wait and watch. This kind of fall we have had 2-3 times post-budget, but market has again taken a support. So we'll have to wait and watch and going forward. Of course, the result season which is coming in continues to be non-supportive.
There's also a sense in the market now that the government, which had bulk of its focus and commentary about development, is now changing course midway towards, social welfare, etc. So the capital markets / corporates perhaps do not, figure at the top of the heap in the priorities. Is that also a sense which is making the street a bit nervous, and so markets perhaps is coming down on its own weight of over-heightened expectations from the government?
Yeah, so sentimentally, a lot of factors are affecting the market, as you rightly said, and we just discussed. The first one is the extra taxation on FPIs. The second is whether the economic development and the commercial factors are on the top priority in the mind of government or not, or is it the social benefit and the populism which is so these factors we tend to discuss more when there is a doom, when there is a correction in the market, and our reactions or our reasonings tend to get explored by the fall in the indices. But being a democracy, populism has always been top for the any governments over the last 75 years. And it has been for this government in its first term also, and continues to be in the second term also. Of course, as you rightly said, in the short term, that there is an overweight of over expectation, which is where the market is feeling a little let down, that the things may not be falling in place as the expectations were. The focus on infrastructure spending, the focus on capital investments. So only the government investment or government expenditure piece of the economy was working or is still working. The private investments was anyway not working. Consumption, which was working till about 2 quarters ago, has not now been working for 2 quarters. So all the hopes have been depending and will continue to depend on government expenditure. And if the government doesn't deliver there, then that will be a bad outcome.
Kunj, good afternoon. This is Nantara from New Delhi. So let me play the role of the devil's advocate from New Delhi. You're disappointed the government is not pump priming the economy as much as it should be, or focusing as much on spending on infrastructure. What about the private sector? We've not seen the return of the private sector capex. Stubborn, not looking like it's going to be making a comeback either. And, the liquidity crunch that is there among investors, the very fact that, we are in the midst of a very lackluster earnings season too.
Yeah, so a lot of factors have got mixed together. You rightly highlighted quite a lot of them. So let's try to break all these things one by one. See, private sector is not in the business of governing or is not in the business of looking for votes every 5 years. So they will not do any investment which is for the social purpose. They will purely do any investment which is for the commercial purpose, and that's how things work, and that's the right approach also. Now, in that, demand is not there, consumption has not been growing, so there's no reason for them to invest or increase capacity. Along with the demand or the consumption slowdown, the earlier capacities itself, the utilization across industries have been at a relatively lower rates. The capacity utilization is nowhere near the full or closer to the full of the capacities, so that they need to start investing more. And that's why private sector investments has not been happening. So coming back, it obviously boils down to the government of the day, that they have to pitch in such times and do investment, which they have been trying to do also. So for this government in the previous avatar of the last 5 years, they have done a lot of work. In the current negativity of the market, we can't forget the fact that the kind of road infrastructure development that happened in the last 5 years had not been seen earlier. And there have been allocations made even in
the last 5 years. We also saw what happened in the last 5 years, and this government has also meant serious business about, cracking down, if I may call so, hanky-panky, which I think is also making the private sector a bit nervous today. You're seeing, how there is absolute inaction in the corporate sector. Kunj, before we let you go, I want to end with what we're seeing today. You're seeing the likes of, let's say, a Bajaj Finance, which is taken the hardest knock in today's trading action. Is it really about the FPI surcharge? You really feel that the markets from July 5th, when Nirmala Sitharaman, the finance minister, first made the announcement, was seriously expecting a U-turn, and that's why after yesterday's reply to the finance bill, we are seeing what we're seeing on the Lal Street today?
So my personal opinion is it's not about the FPI's extra taxation. That indeed is a negative factor on the market. That does have an overweight. Let's also go back 2 or 3 years ago, when the first time the taxation had been introduced on the long-term capital gain. And broadly, for I think almost 10-12 months after that year's budget, the market for 1 year had underperformed. So taxation do have their impact on the overall valuation of the market. If I had a return expectation of 30% from the market, with this extra taxation, my returns will come down to 25 or 26% or whatever X number. And to that extent, I will have to bring down the valuation of that market. So that indeed has an impact, but I think over a period of time, it will get normalized out.
Just one last question on the valuations of the market. The mid-cap and the broader market segment have gone down to, say, 5-year lows in terms of valuations. Does it merit take a closer look, and what are the areas where you find attractive opportunities for those who still have cash and may start dipping in?
Yeah, so it merits attention. I will like to keep my eyes on the December quarter numbers. So June quarter numbers are expectedly coming bad. So it's not a negative surprise, but they were not expected to be good. Till now, the numbers that have been announced have not been good. I guess same will be the case with the September quarter numbers also. So the eyes will have to be kept on December quarter numbers for a few reasons. One, traditionally it's the festival season. So it's more of hope right now. There is no basis to say that the demand will pick up. 2, by then, if the monsoon turns out to be normal, not only in terms of quantity, but in terms of spatial distribution, hopefully that will lead to the good crop and a good sentimental positivity in the minds of rural consumers. 3, whatever short-term measures of the budget have been there in terms of putting money in the hands of consumers will also be taken care. And 4th and most important, there will be a base effect of the last year, which was a lower base. The slowdown started from December quarter in the last year. So keeping all these things, as I said, right now it's a hope. Coming to where the opportunities are, if I look at the opportunities of investing, I think BFSI, despite all its negativity that is there, select plays within that will continue to be investment opportunities. Consumption, with the current slowdown, which has led to correction in prices and or valuations in some cases, is the opportunity that will be there within consumption, both durables as well as non-durables. Within commodities, cement is a space, I think, on any correction around this monsoon will be the another space to look for in terms of investment opportunities. So in my view, these are the investment pockets that are available to.
Right. All right, Kunj, we'll let you go on that one. Thanks so much for chatting about the nervousness in the market with us this afternoon.